Welcome. This is Bert Dohmen with Chart Guru. Today is the 16th of June, and we want to discuss the emerging markets using the Morgan Stanley Emerging Markets Index. This is a chart that we have shown in the past because we have been very bearish on the emerging markets, contrary to accepted Wall Street wisdom. We believe that there is, on a risk-adjusted basis, there is no reason to go into the emerging markets. Here we can see the long trading range over the past year of this index. There have been some declines of perhaps 8 or 10% over that time, and there have been some rises from those declines. But it's been a tradable sideways pattern, and using the indicator below, you could have had some nice trades, long and short. However, this all came to an end in May, and here we can see the top in May, which then broke this line here, the horizontal line, which actually connected the peak here. These here can be considered false breakouts. When you get above a prior high, it should continue if it's a strong market. If it reverses and goes downward, that's a negative sign. That means that the market has run out of buyers and that you will have a meaningful decline. Here we had a decline. It wasn't that great, maybe 10% or so. And then you had another rise, again above this line here. But once again, there was no follow through. And then a reverse downward, making it a false upside breakout. And that is very negative. And then here, this trend line that we drew from the November bottom last year, this is November 16th, and this bottom here in early April, that's an important trend line. When that was broken, it was really a very loud signal to head for the exits if you were in that market. And look at the sharp decline. It's now below 14, and from a high of about 17.5. So the emerging markets right now seem to be very much on the defensive. There should be a bounce from the oversold condition, but except for short-term traders, we would not recommend that. But of course, in this video, we don't give buy and sell advice. We just tell you the condition of the market. Now it's oversold, and usually what we like to do is after a bounce, we like to look at a place to sell short again, but we don't look too far ahead. We let the market tell us what it's going to do and take it one step at a time. We are not one of these people that claim to be able to foresee 5 or 10 years into the future. So we take it one step at a time and let the markets tell us what to do instead of telling the markets what the markets should do, because normally they don't listen to anyone. Okay, thank you very much. Now, the next chart will be of the South Korea market index, and you will find that very interesting because it is also giving some very loud warning signals. Let us now look at the Korean stock market index. Here you can see a trading range for about the last year or so, and the indicator below shows you a very nice signaling device. It's a special stochastic indicator, and you can see if you follow the crossovers for buy and sell signals, you could have done very well in this trading range over the last year. However, starting at the beginning of June, there was an abrupt decline. This is when all the emerging markets suddenly got a case of viral pneumonia. And Korea is actually a country that's in a decent economic shape, but the emerging markets are now seeing big outflows of money. This is not an area to go bargain hunting in at this time, which of course is contrary to popular opinion, namely that emerging markets offer great opportunities. What these analysts that are bullish on the emerging markets never talk about is that even if the return were higher than one that could be achieved in the US, which of course it hasn't been in the last couple of years. But even if it were, that is not a risk-adjusted return. The risk in the emerging markets is so much higher. So you should get a much higher return in there just to compensate for the risk. And that is why at this time, with all the indicators, fundamental and technical, we would not touch that sector. This is Bert Dohmen signing off. Thank you for joining us today. And we'll be back in a few days probably with more of the chart guru.